Good afternoon, everyone. As I can see right now, we are just about 100 people right now, uh, and it's always excited to see there is a lot of excitement about around the labor codes. We did one webinar last week where there were almost 450 plus attendees in that webinar, and we thought we're doing another follow-up session immediately. It's not a follow-up or another similar session once again, so there could be a lesser excitement this time because it's just within a span of 7 days waiting this follow second session. But I see uh, excitement is all building up here. More than 100 people already there in this webinar. Great to see, and I hope with the excitement you are joining, with the curiosity you are joining this webinar, we would be able to try and solve those curiosities, queries, questions in your mind. Um, Quickly starting with, thank you so much for joining this webinar, and and a very warm welcome to all of you. A very good afternoon. Before we jump on to the discussions, I will take a couple of minutes to do my customary slide. By now, I keep calling this customary because you know this customary. You all already know what Lawrbit is, what we are doing for you. So Lawbit is India's leading regulatory technology company or RegTech company offering a regulatory compliance solution called GCMS, which is the one of the leading regulatory compliance technology software in India, and not just in India, but global as well. Today, we are serving 550 plus entities in India and globally, uh, wherein we have more than 15,000 users who are using our technology. We are now a team of 105 legal tech professionals. When I say legal tech, it includes lawyers, company secretaries, legal professionals, they are tech professionals, IT professionals. And our global delivery center is based out of Jaipur. And we are serving our 40 plus industries. We are serving clients across right now 40 plus countries. We have the capability to serve or rather done projects in 70 plus countries. So that's a quick introduction about ourselves. Beyond this, we have other solutions like legal matter management, enterprise risk management, advisory services, regulatory compliance health check or compliance audit services. All of them, you may be aware of it, or if you need anything, please feel free to reach us. All right. Building on the excitement, I have my friend Anurag with us back again today to discuss on the labor codes. I'm sure those of you who have attended our various other sessions on on any of the HR laws would have already known Anurag by now. Anurag is a chartered accountant by qualification with more than 2 decades of experience in assisting their clients in the tax, social security, immigration issues. He was prior to starting his venture called By the Books. He was he said served with a big four, where in fact when the labor codes were introduced, in fact that was the time when he had done a lot of projects with this big four in supporting clients get prepared on the labor codes in terms of reviewing their policies, uh, CNBs and requirements, or the compliance expectations around it. And he has also supported his clients in the international workers compliance requirements, surrender of trust exemption, because this is something which was all the large organizations who were running the trust in the last year and a half, a lot of them have surrendered their trust. And that's something where others are also comes, has a similar kind of an experience where he has also supported, and this projects one done jointly. Others sir he is an industry veteran, more than 36 plus years of experience, and he's the founder of Nidhi Niyojan, which provides advisory and compliance services to companies on social securities, retirement benefits, and all. He has served with organizations like Maruti and HCL for more than 3 decades, and he is also a consultative member, committee member of EPFO and on automation, and executive committee member of All India Organization of Employers. very well learned, with good connects, good understanding, and regular interaction. I was almost weekly interactions with the regulators, understanding what is their thought process behind those laws, what challenges industry is facing. He has been a representation for the regulators, discussing about what changes and how it can be simplified and implemented for the industry. Others having you here today is really great for us because there are a lot of granular expectation challenges, queries around the labor laws, which we are expecting to have your opinion on. Because I'm sure in the last 20 days, everybody has read a lot of articles, attended some webinars, but beyond this, we are looking forward to learn a lot from you today.
Sure, sure. Thank you. Thank you, Jayant. Yeah.
And I also have my colleague Shweta. Shweta heads our regulatory regulatory intelligence function team of lawyers and company secretaries who are responsible for providing regulatory intelligence, their real-time updates. And her team has been working in tracking the changes in the labor codes and other laws from the time they were first notified. And Shweta, good to have you here. I don't know if I can't see you. Hope your camera is on.
Yeah, it is. Thank you.
Okay. Anurag, on to you. Uh, to now let's start talking about, what everybody's waiting for. So we are going to be talking about, obviously a very quick introduction about what the labor codes are, what the genesis, how they were, and what has been the journey so far. What are the major reforms the government is trying to bring in here, the implementation strategies. That's where the discussions start getting more deeper in terms of understanding the real impact on your payrolls, on the on the liabilities of the organizations, where it is we are right now, and how the organizations should start preparing themselves for these labor codes. Let's begin with the introduction. Anurag.
Thanks, Jayant, and it's always nice to join Lawrbit's webinar. I don't feel that this is like webinar anymore. It's more like an interactive session that we have along with others, you and me. So we'll keep the session interactive only, and I'm seeing a good number of participants today. In fact, the numbers are increasing minute by minute, second by second. But that is the beauty of these labor codes, because I'll tell you, the journey started somewhere in 2019, and since then we have been waiting with, I would say, bated breath, that when is going to be rolled out. And at that point of time, I remember we did a good number of projects on impact study as to how policies and procedures are going to be impacting the organization, their employees. And November 21st is when we have gotten the news that a gazetted notification and the effective date has been notified by the authority. So what is the fine print around it? What is it that needs to be done? This is all what we are going to be covering. But just to, a quick recap uh, to understand what the labor codes are all about. And I think this slide captures it very, very beautifully in saying that it is nothing but bucketing, or I would say four verticals has been created for the labor code. So right now, if we are talking about 29 central labor legislation, each having its own, jurisdiction authority, each having its own definition, each having its own set of regulations and rules. Uh, but now all these 29 legislations will be bucketed into these through four verticals, which is code on wages, occupational safety health, code on social security, and industrial relations code. And what essentially the intent is basically to I would say centralize the legislation to some extent, but at the same time bring a lot of harmony and synchronization between the labor law per se. Because what had happened, Jayant, was that if you look at the all these 29 legislations, some of them are dating back uh, before independence, in fact 1920s, and then some came into picture in 1950s and 60s. So these are very, very dated legislation, and from then till now times have changed. The kind of companies that we are seeing has changed, their organization structure has changed, the kind of employees that are rendering or providing services, those categorization, those nuances have changed. So obviously, with the new times, a new code is coming into picture, and this is a trend that we are seeing with the present government, because we are also awaiting the Income Tax Act, which is gonna be which is supposed to go live on 1st April 2026. So this will be the, I think, 1st April, instead of being the April Fool's Day, will be the day when both the big legislations will be coming into force, provided rules and all those frameworks are put in place. So uniformity in definition is one key thing that we are looking with these labor codes, which means that all these four labor codes, definition wise, they will be more or less aligned with each other, except for a few items here or there. Take for example the definition of the employee, take for example the definition of the contract labor, employer, establishment, your wages definition. All these will be uniformly applicable across the codes. So this is one big relief for companies, one big relief for consultants like us to interpret the law and take that level of position. So after reading these labor codes, one would be in a comfortable position to see what positions can be adopted for an organization, what advisory can be given. Plus from the regulator side as well, because it is expected that the litigation scenario or litigation landscape is going to be changing vastly because of this year, categorization and uniformity. The scope of litigation will reduce to a large extent. At least that is what is expected on paper. Similarly, a greater emphasis on use of technology. We are talking about web-based inspection schemes. We are talking about a scenario wherein even for certain segments of the code, third party audits are also going to be promoted. There will be a separate panel of the third party auditors who will be conducting the audits. So these inspection and all these will be moving from the government side to even those impaneled auditor as well, which is still
And
there
common challenge also, not
and
common
challenge.
challenge. ECRs
Absolutely.
will be common. Yeah.
So in fact, sir, you can explain on that particular concept, because that is all key interest for people who are carrying on compliances from the payroll side.
Yeah. So, what happens is they are still working out. I think so. Probably UN will be the unique field both for ESI and PF. They are still working and they are still not come up with the clear guidelines. But the thing is that since wages are common now for EPF and ESI, and thereby UN will be unique field for recognizing the
Hmm.
employees from the perspective of ESI and PF. So thereby,
Hmm.
the challan, the ECR format is also going there are also going changes in that. And then,
Hmm.
there will be a common challan which will be prepared for all the for PF and ESI. But
Yeah.
the main interesting thing is that there won't be any system will not be allowing any retrospective deposit of challan the way it was done now. It has to
Hmm.
be on the basis of the current month only. That is the main take in the proposed ECR which is going to come. So that
Hmm.
needs to be taken care of. Uh, that there's a possibility that the arrear payment what we used to give have to be restricted now. And
Hmm.
how it will be done practically, that we are also working out with the PF authorities how it can be practically done. So
Hmm.
that is one of the take from our side, that ECR is a very important piece which is definitely going which is undergoing some changes in that.
Hmm.
So we will come with that also once it is rolled out.
Absolutely, absolutely. So in terms of the technology, what we are seeing is there will be a greater focus from the regulator side to use the technology to gather data, to disseminate information, as well as all those web-based inspection, all those audits. So I think the government intention is that presently, if we look at organization and the way they maintain their records and registers, particularly in relation to the labor codes, right now still we are operating in more or less kind of 1940s and 50s era, wherein there are plethora of registers, and many times while doing due diligence, we have seen that many of the employers can't even practically maintain those level of detailed registers. So that is where we see that the technology will come into picture and will ease compliance from the organization's perspective. At the same time, because of that use of technology, accountability and transparency is what we are expecting, that there will be a greater level of accountability from the regulator side. There will be a greater level of transparency as well between the regulators vis-a-vis the organization as well. And from the plus side to the regulators of these labor codes is that there is going to be effective enforcement. Now, the other day, myself and others sir were sitting with the EPF authorities, and there was discussions around how PF authorities and ESI authorities are going to be unified. There are some discussion at that level also happening. So how it will go, how it both the departments will merge together and create a bigger task force, because one of the most foremost challenges that EPFO today is facing is on account of the lack of workforce, as a result of which many times they are burdened with too many queries, too many clarification, and they're not able to resolve it. So I think with this unification, what we are expecting is a concern of a consumer, or rather concern of the employer as well as the employee to get addressed at the earliest. Last
And
but not the
uh,
least.
and uh, and Anurag, sorry to interrupt. So another thing is that the inspections, you rightly said, will be e-inspections, and they're
Mhm.
also introducing third-party audits.
Mm.
Right? They in the revised codes, labor codes, they are introducing third-party audits, which is going to happen.
Mm.
So that is also, and the role of inspectors or EOs. So they have redefined it, that
Mm.
they will be facilitator for you in case you require some help from them. So they will be able to help you also. This is what is defined under the new laws.
Yeah, yeah. At least on paper. At least on paper, we'll have to
Yeah, it
see
is on paper.
how it goes. So yes, of course, for the culmination of everything is expecting to result in the ease of the implementation, both from the organization as well as the regulator side. So if you look at all the four labor codes, we know by 2020, all of them had received a presidential assent, and effective November 21st, 2025, all the four codes have been notified. But the key thing here is the statement that they released in the press release, as well as if you look at the draft center rules, they are supposed to be reissued for public comments. The state rules also will be reissued for public comments, because most of these rules were drafted way back in 2021, 2022. And right now, when we are sitting in the fag end of 2025, there is some changes or tweaks that the government would like to do in the courts. Of course, they would be gathering comments from the public as well. So once those inputs are received, it is expected that the draft rules will be also notified. In terms of, I think the topmost question that we are facing from the companies is, what do we need to do right now? Because with these codes coming into picture, do we have to start complying with it, or rather we should wait and watch? Because the government is also not giving a very clear direction as to, when we talk about November 21st, what is the expectation from the organization side. What they are doing from the Ministry of Labor and Employment side is, there's a lot of awareness and a lot of education campaign which is going on both within the regulator side as well as disseminating to the public as well. So we are seeing all those flyers, all those marketing collaterals, wherein they are saying that what will be the advantage, what will be the distinguishing feature of all the four labor codes. And plus, at the same time, there was a comment from the labor secretary as well, wherein it was mentioned that 1st April 2026 is when they are going to be effectively looking at a full out rollout of all these four labor codes. So as of now, I think that is the position. We are also keeping a very close tab on this entire development that is happening on a daily basis. On a very, very frequent basis, some new circular or the other is coming into picture, some new clarification is being issued, and that is basically our onus is on us to basically disseminate to the relevant clients and organizations as well, letting them know that what are the changes that are coming into picture.
I know there was one notification yesterday in Maharashtra. What was this? Where I think they were talking about some partial implementation. Have you did you get a chance to look at that?
No, there were a couple of notification. I think employee state insurance is going all out. They are
Impossible. Right.
in a couple of days they have released few circulars wherein they are saying that first and foremost the benefits are going to be extended. So for women they are saying that the benefits are going to be extended to their in-laws as well. A widower will also be entitled to ESI benefits. So what they are telling their respective field office is that be ready, because now the codes are coming into picture, so those benefits will be extended. So they'll have to make sure that as and when those claim event gets triggered, then they will be able to supplement those cases as well. At the same time, I think there was a second circular also issued which talked more about the applicability side, that which are those establishments which will be covered. So they have specified a threshold limit of 10. So wherever employees are, wherever organization having 10 or more than 10 employees, they will be required to comply with the ESI regulations. But the key factor here, Jayant, is that if you look at the fine print of the code as well, then what we are seeing here is that they have mentioned that companies who are dealing with hazardous substance or something which requires a greater onus on the organization, then in such a case, even if they engage one employee, then also they are required to comply with the ESI norms. So that is one thing that they have considered from the ESI side. Now, if we look at
And also, Anurag, what they have done is that they have also given the option of voluntary coverage in case there is less than 10 employees in the organization. That option is
absolutely,
also available
yeah, yeah,
in
yeah,
under ESI. Hmm.
under ESI. So basically, the purpose is to cover as much as employees under the ESI ambit. I think that is the purpose. In terms of the threshold as well, we will be covering in the next slides that what will be the threshold that they have tried to cover in the regulation, or whether there's still some notification pending from the government side on such limits. So uh, this slide, I think, captures all in terms of what are the laws which are subsumed under the four codes. So code on wages cover payment of wages, minimum wages, payment of bonus. IRC code chiefly covers trade union, industrial employment standing order. Code on social security is one key legislation which covers PF, ESI, maternity compensation, payment of gratuity. Your OSH code covers factories, mines, and different category of employee segment. So they have think of a scenario wherein people used to engage the migrant workmen, contract labor, plantation labor, and all those scenarios. So we used to have all those fragmented legislation, but now all these have been unified under the OSH code. Now, in the next slide, I think it summarizes what will be the impact. And this is something that we extracted from one of the government site itself. It says 29 laws, Jayant, and this is interesting because from your regulatory technology perspective as well, we're talking about 29 laws, now it will be four codes. 1,436 rules have been summarized or subsumed to 351 rules. 31 returns, sir, from the compliance side. 31 returns. Now there will be a single electronic return that is expected from the government side. In terms of forms, 181 reduced almost half, 73. Registers, 84 registers. That was what the laws used to prescribe. Now it is only 8. Registration, 8 the different types of registration. Now to a single registration. Licenses wise, 4 licenses, different segments, single license. Compounding, it was not applicable. There was no provision for compounding. Now it has been introduced for the first time. Compounding is a segment which is covered in the income tax as well as FEMA, but we are seeing it in the now labor laws as well. Improvement notice also is something which is quite new, which has been introduced for the first time. So all in all, if you see how consolidation has happened, I think this particular slide captures it all in terms of what is it that we are looking from the compliance side, and for people who are in the legal circle as well as the compliance circle, they will truly appreciate that how much life would be easier or is expected to be easier once this labor codes will be rolled out in full.
So,
Yeah,
Anurag,
sure.
I would like to add one single point here. Since you
Mm-hmm.
referred registration single,
Mm-hmm.
so
Hmm.
even for this registration, when the company closes, it is mandatory for companies to get this registration cancelled.
Absolutely. Yeah.
So earlier it was not there because this was an
Yeah.
open field, but now
Mhm.
they have made it mandatory. When the
Mm.
company closes, registration is also required to be cancelled.
Yeah, because we have to look at the ease of business concept. Starts with the starting up a business, but it also
Hmm.
comes at the closing of the business as well.
Yeah.
So obviously, because of some reason or the other, whenever an organization would like to wind up their business, things should be
Hmm.
easier for them. Otherwise, they will
Yeah.
always be in a limbo. and that license Raj regime and all those things will always hamper his motivation to close the business, and then basically diversify himself or venture into some other kind of work. So
Yeah,
that
yeah,
is the entire thought process, that you
yeah.
start your business, the ease will be accorded by the regulators, but at the same time, in case because of some reason or the other, you should not go into a belly up kind of a situation wherein you are in deep losses and then you approach the authority. Look, now you
Correct.
resolve the issue.
Absolutely. And the
So it
penal
will
charges also are very stringent. Penal charges
it
are
will
also very
it will
stringent if
have
you
a
don't follow.
good or a positive impact on the banking industry wherever they
Mm.
provide that loans to such segment of companies. Now those losses can be curtailed to some or a large extent. We are also talking about the limit of 300 employees for retrenchment limit, wherein companies
Yeah.
having 300 or less employees, they don't need to approach or get a prior approval from the government. So
Mm.
for MSME sector, I think this is a great plus.
Yeah.
Anurag, before we move, just can you before we move, can you just help me understand what do you mean by compounding and what is improvement notice?
See, compounding means in that sense that whenever there is some non-compliance issue, then normally in normal recourse, what will happen is there will be whatever is the arrears, there will be those arrears have to be paid along with the penalty, along with the interest and all those things. What the loss is, and this is applicable only for first instance. Okay, so in that case, what will happen is that the government is giving you a chance wherein they say, okay, fine, you don't have to pay those harsher penalty, you pay whatever is the arrear, and there will be some compounding thing. So that is the only thing that will be required, and I think this is something that we have seen in tax laws as well, uh, um, to ensure that non-compliance is first and foremost taken seriously, and that is something that we are going to be covering. But at the same time, wherever there are those first time offenses, the organization should not be unnecessarily, stigmatized because of those aspects. So as a result of this entire concept of compounding has been introduced here in labor code. If we talk about the
So,
improvement notice, I think it is a kind of a enforcement tool which will be used by the regulatory authorities. Mainly, I have thing to do with the health and safety inspectors to address the non-compliance wherever those health and safety standards are not being adhered to by a particular establishment. Particularly, you would have seen it in hospitality industries that those safety and health inspectors inspect and then they will issue an improvement notice. So those concepts will also be introduced. So what they will say is,
yeah.
okay, fine. In all probability, your compliances could be in place, but at the same time, there's a scope for improvement. So what are those things that you need to improve in terms of the health and safety wise for your employees, for your contractual employees? That is something that they will be issuing.
So, Jayant, I will further supplement, what Anurag was saying on compounding. So,
Hmm.
right now, presently, there are separate laws, right? In PF, if you make a non-compliance, there is section 14B, 7Q, which
Hmm.
shares, which talks about damages, it talks about the penal charges, right?
Right.
Likewise, in ESI also, there is a separate provision for the damages. Now, what happens is once all the codes are subsumed now here, except the
Hmm.
PF. So one offense, let us say there is a non-deposit of PF. Instead of 15th, the company deposited on 17th or 18th, right? It did deposit, but it deposited late, 2 or 3 days. That will be the first offense, right?
Hmm.
Hmm.
And this is the first offense under the umbrella of the labor law. So
Hmm.
whatsoever, if then the first instance happens in PF, second supposedly happens in ESI or some other law. So that will be a second offense, right?
Hmm.
And likewise, there are only three offenses post that they can prosecute the company. The company can be prosecuted, and very stringent penal charges are there, which are levied under the this newly introduced law. It has very
Hmm.
stringent things. So only three uh, compounding penal charges are applicable. Post that, prosecution is there, straight away prosecution. So, any law. So we say first law, is PF, second is ESI, then gratuity, or then some labor welfare, or any whatsoever laws we are talking about here. So you make any miss in first law, it will be the first instance between all these laws. That's what is known as compounding
So,
here.
what you're effectively saying, earlier they were all different authorities, different
Yes.
regulations. So
Mhm.
I do some miss in one, nobody others don't get impacted by this. Nobody else knows about it,
Yes.
and I can get away with. You know what? I think the common thing which people say about labor laws, we will manage the compliance, right?
Correct.
Rather than will comply, right? I think this
Mhm.
this is the shift which we saw when GST was introduced in the
Yes.
tax laws. And I think
Mhm.
what you're saying is we are effectively going to see the same in the
Yes.
labor laws also. Hmm.
Yeah, absolutely.
Okay.
Yes. Mhm.
That's going to be interesting. Okay.
Yeah.
Yeah, yeah.
So I think, yeah. So in terms of the chronology of events, I think we are more or less aware what has happened from 2019 to 2025, 21st November. So I don't think I will be covering that part. But interestingly, after 21st November, what has happened is that is where things get interesting, because 3rd December we saw that Delhi government notified draft rules for the occupational safety, health and working conditions, as well as Delhi Industrial Code. Now, this is one interesting because prior to that, I remember just before the Delhi elections, hardly any rules were notified. In fact, for all the four labor codes, the Delhi government hadn't issued any draft rules, but within a short span of time, they have issued the draft rules for public comments. So right now, if I say Delhi is one of those states which have covered all the four rules. And on 8 December, we saw that Ministry of Labor and Employment issue a clarification, because there was a suggestion from the High Court as well that there is gonna be litigation limbo, particularly in relation to the industrial disputes, which will be taken over by the Industrial Relations Code. Then, in such a case, the Ministry of Labor and Employment has clarified on 8 December by saying that all the existing labor courts, industrial tribunals, and national industrial tribunals will continue to adjudicate new and existing cases. So that judicial limbo has been avoided through this particular notification. So this is the situation as on date, and as we were highlighting, there were a couple of notification issued by the relevant ESIC officers as well, as to what is the definition of wage covers, how the applicability will be there, plus at the same time what kind of benefits will be extended. So this is only in respect of the SI, but we are expecting a lot more circulars from different regulatory bodies in the near future. Yeah. So I think after that, I think this just gives you a sort of like idea as to what has happened. The print media is bombarded with all these articles, all those clarification. The government is also working in an overdrive fashion in terms of sensitizing the organization, the employees, as to what are the key changes which is expected to come in the labor codes.
And I think interestingly, you pick up any newspaper today, you
Mm.
have advertisement of how it is impacting the miners, agriculturists, or for every industry, for every type of employee, there is an advertisement. And I think you use the
No,
right
in
word.
fact, Jay, they have recently issued a very extensive press release.
Hmm.
I'll also share it with you, in which every sector wise they have said how it will get impacted. So they have come out with pharma sector, how the labor codes will be impacted, how for tech sector it will be impacted, how women employees will be positively impacted by such changes, how a migrant population will be impacted. So they have, that's why I'm saying, the government is working overdrive. It's not that they have just notified it and they are saying that okay, fine, our job is done. But what is happening is that was the basically the beginning of the entire framework. We are expecting a lot more from their side. There are a lot of ambiguities. There are a lot of gap areas wherein we are expecting a clarification from the government side. And I believe that they would be providing all this in a short span of time.
So so what also it indicates that a lot of there is a concern in everyone's mind is it like going to be like 2020, 2021 when government was sounding very positive, very bullish about it, but suddenly nothing happened. But this time with the kind of overdrive in terms of information, in terms of the advertisement and the publications, I think looks like we are not in the 2020 where 2025 or rather 2026 where it will see the light, right? Completely.
Because I'll tell you,
There'll
when
be there'll be no
2019 and
moment.
20 it came into picture, there was a lot of shock, awe, as well as surprise as to how it will be changing. From 2020 till now, I think that, that sticker shock is no longer there, except for a few here and there, some provisions. So those debates and discussions are happening, but I'm not seeing that much amount of now resistance. Even organizations will be more or less or are expected to be ready on this. They know now this is a law now, and this is something that is going to be coming in the near future. Vis-a-vis a scenario where in 2019-20 people were just trying to understand what has hit them and how it will be impacting. So I think within this time frame of 4 to 5 years, we as an individual as well as organizations, we will have adapted to this concept of having labor codes.
Right.
So, so even inspector in regard to the rules aspect as well, if you look at the code on wages, we have around 36 states as well as union territory. If we look today, almost 34, almost all of the states have released. Few here and there said Nagaland, West Bengal, Delhi has now completed. So I would say Delhi is not in that bucket. West
That is
Bengal, Tamil Nadu, and Nagaland. These are the three states which have to release some rule or the other. I think West Bengal has yet to release a rule for any of the courts. So I think that is one resistance we are seeing from West Bengal. But apart from that, all the states are typically on board, and that's why I think it gave confidence to the government as well to basically come out and notify these codes. I think that was one of the key factors.
Others here, I just want to take your view. When these governments have not notified the regulations, what will happen in this scenario?
So, Jan, thing is that as of now, it is a central notification only. So we are waiting for two things. One, the schemes which has to follow for all the four labor codes is still to come. How at macro level these schemes are going to work. Because there are a lot of acts which are subsumed. So interestingly, we have to see that the subsumed laws, what impact it will be having in the state government published notifications, because in parallel they will also come up with the clarifications. Right, so that is still to come, still to be published. We are just waiting for that also. So that will give a actually clear and implementable solution to us also, to the industry also, till the time, because this is a broad guidelines which they have given in this 21st November notification. And because see, the minimum wages threshold is there, and then the wages concept is still there. Excluded employees definition is still there. Whether they will remain or they are going to change it. I mean, how they are going to change, how they are going to impact, because they have to change the specific laws also for that. So that is the only piece we are waiting for it. Our presentation here is basis the current notification and the current this labor codes whatsoever they have published as a central subject. So we will be having a separate session for that also once the state specific laws comes.
So in the next like 10-15 minutes, I'll quickly cover what is what was there under the existing regime, how things will change with the new labor codes. So we have covered 4 slides on four labor codes, and starting with the code on wages. So right now the minimum wages is applicable only for scheduled employments, but the code on wages coming into picture, uh, almost all category of employees is expected to be covered, because what they are doing is there will be a categorization of the employees based on their skills, so which will be unskilled, semi-skilled, skilled, and highly skilled. And then based on their skill sets, based on whichever geography they are operating from, what kind of nature of work that they are doing, is it a harsh nature, is it something to do with dealing with hazardous substance, they would be prescribing minimum wage limits. One thing that I was just having a look at the schedule was that they've classified something like an accountant is highly skilled as well as plumbers is highly skilled. So there would is expected to be minimum wages which will be prescribed by the government. But before even we go to the minimum wages, there is a concept of national floor wage that will be introduced for the first time, wherein the central government will be fixing a national floor wage, and then the states is expected to basically follow in line or provide minimum wages which is more than what has been prescribed under the national floor wage. So that is something that is clearly expected. There is a national wage advisory board as well which has been formulated and is working on deriving the national floor wage. Similarly, for the payment on wages act as well. So right now the threshold limit was for 24,000, and for the benefit of larger audience, the Payment of Wages Act is a very crucial piece of legislation which covers aspects like your payment of wages, what will be the timelines around it, what is the quantum of deduction that can be allowed by the employer, what will be the full and final settlement timelines, what will be the overtime related provisions. So all these are still there or were there, but because of this 24,000 limit, it was by and large applicable for people who are falling in that particular segment. Now with that threshold limit gone, we are seeing that the entire payment of wages related provision would become applicable to even white collar segment employees as well. And that is where we are seeing a big change, because then organizations will have to make sure that those provisions that have been carved out in the Payment of Wages Act is complied irrespective of the category of the employees, irrespective of the salary threshold. So this is one big area. Similarly, for the Payment of Bonus Act, we see that there's a 21,000 and 7,000 limit. But then it might so happen, because what the provision says is these limits will be notified by the appropriate government. So will they keep this limit same, or will they enhance it, or there will be a common threshold limits for ESI, for bonus, for PF? This is something that we will have to wait and watch. Definition of wages, there's a separate segment that we are going to be covering. There's some interesting slides with numerical simulations, and we have added some thoughts from the government side as well, which came, I think, yesterday as well. So we have added those slides as well, so that greater amount of clarity would come on this particular definition of wages. Last but not the least is around the employer part, because right now there's a narrower definition of the employer which doesn't cover the contractors. But now, because the contractor will also be covered under the definition of the employers, they can't go scot-free in that sense. They will also have to do the necessary compliance. They will also have to ensure the health and safety of their employees. Of course, at any point of time, my principal employer will always be liable, but the onus will be on the contractor establishments as well.
Because
Yeah,
contractors, because
But
yeah, please
sorry,
go ahead.
I was asking, sir, by including contractor in this definition, does it by any chance reduce or dilute the responsibility of the principal employer?
No, not at all. The responsibility remains, but thing is that here, the contractors become principal employers in themselves. So they have to make the similar compliances what any other establishment has to, do. So that's why the very stringent compliance. Otherwise, what used to happen is that the contractors were not giving the correct picture to the principal employers. Maybe they were not depositing in time, or whether they were not divulging complete information of the employees which are engaged. Because of the volume, also they used to have, let us say, 10,000 employees, and any XYZ establishment covers only 400 or 500 or maybe 100 employees out of them. So they used to give a composite challan, and from there they used to, got scot free. Whereas the principal employer had paid them also for making the, compliances, BPF, ESI, because it was inbuilt in the cost itself. But the compliance was the issue. Now they cannot go scot free. They will be definitely caught, because they have to make the same compliances what any establishment has to make. Right, so that is that's the only reason why though we use the word contractors, but they are in principal employer and themselves only.
So code on social security, again, another crucial piece of labor code. So right now, if we talk about PF, ESI and all these things, their focus area is primarily on the organized sector. But now the scope or the coverage of the code on social security will expand and will include unorganized workers, gig workers, platform workers, home-based workers. All these category of employees will also be covered under the code on social security. And so we are seeing a concept of universality. I mean, that is the intention of the government, that irrespective of what is your category in which you will be falling upon, be it your normal employer, be it a fixed termer, be it unorganized, be it a remote working, be it a gig worker, platform worker, a social security coverage will be accorded to you. So that is the theme of universality that is, I think, that the government is trying to achieve here. In terms of the applicability of the provisions of provident fund, we know that there is a 15,000 limit on the basis of which your PF, EPS, and EDLI used to get worked out. But if you look at the interesting part in the definition of the employee, they have mentioned that irrespective of the threshold, it is expected that the employees will be required to mandatorily contribute towards PF. Now, this is one big area. What we are seeing is, because right now there's a 15,000 threshold limit. So the question that comes to one's mind is, will that threshold be removed and PF become mandatory for all segment of employees? Uh, but not pension and EDLI. Pension, we are already seeing that there is an exclusion. There is an intent by the government that they want to, stop the pension scheme, typically because of that September 2014 circular. But PF is something that they want every segment of employee to get covered. So, others, sir, what are your thoughts? I mean, this the intention that they want to remove the 15,000 for provident fund, or we will have to wait for some more clarity? Because keeping in mind that the existing schemes will be there operating for a period of 12 months, should we expect such kind of drastic change to happen at this date or after 12 months?
So Anurag, if you go back to 15th of November 1995, when they
Hmm,
introduced EPS scheme, they had very much clearly written that particular notifications that the EPS wages will get
hmm,
changed every 5 years,
hmm,
right? That's why when it was introduced in 1995, the limit was 5,000 only,
hmm,
right? In 2002, this limit got enhanced to 6,500. Then from
hmm,
September 14, it got again enhanced to 15,000. Now this is overdue because because it's almost 11 years that they haven't amended this 15,000 limit. So since this, unification of wages are there, which is expected, that's why I think so. They will be doing some rationalization wherein ESI, PF, and for even for gratuity also, they might come up with a revised and upgraded, you know, this basic pay or the wage definition. It might
hmm.
increase.
Yeah.
Right, and you are right. So, once the excluded employees category or the threshold of 15,000 gets increased, that definitely PF will have to be, liability will definitely increase, which is now restricted to 1,800 rupees. But in any case, if that increases, then pension and EDLI will also get impacted.
Yeah.
As of now, in the current scenario, whatsoever they have published, so it is PF they have left apart because a lot of organizations are there which recover PF on actual basic,
Hmm,
right? And but for ESI and I'm sorry, but for this EDLI and EPS, it is restricted to 15,000 threshold only,
hmm,
right? Except for employees who are opted for the higher pension or who had given in writing a declaration under para 26(6) that okay, we want this PF to be recovered on the actual basic, or we want to contribute EPS basis the actual wages, whatsoever we are drawing.
hmm,
So it is expected. Nutshell is that it it is expected that this threshold will definitely go up
hmm.
because it is already overdue. I think so. They'll definitely increase it so
Yeah.
that
Yeah.
to bring most of the employees in the ambit of these laws.
Yeah, because we have also look at that the last change of 15,000 came somewhere in September 2014 only.
14,
So
yes.
since then, I think we are reaching more than
11 years. Yeah, yeah. 11
11
years have
years,
lapsed.
more than
So
a
this
decade,
is overdue.
more than a decade.
Actually, this is
It
overdue.
is already. Yeah, yeah.
Yeah.
In fact, interestingly, if you look at the gratuity limit as well, Jayant, the gratuity limit earlier was, I think, 350,000. Correct me if I'm wrong, sir. And then from
Initially,
3 lakh
yes.
50, 3 lakh 50, they increased it to 10 lakhs. And from 10
Mm,
lakhs, it has been increased to 20 lakhs. So
yes.
gratuity, I think, is keeping up with the times. But PF is something that I would say from 6,500 to 15,000. So yeah, I think it is overdue.
Yeah.
So in terms
Yeah,
of the
Jayant.
applicability, yeah, Jit.
So does this now also apply to contractual employees or fixed term employees?
Absolutely. PF,
Yes, yes.
anyways, wherever you're falling in that framework of employer-employee relationship, PF would be applicable. Of course, there would be those dynamics around 15,000 limit and whether you're going to be contributing on a voluntary basis or not. But uh, even organizations who are having employees plus contractual employees plus fixed term employees, wherever those headcount numbers are exceeding 19, they are they will have to be covered. And this is not something under the new law. Under the present law itself, even the contractual population is also counted for the purpose of deciding your coverage. So if we move towards the ESI part, again 21,000 is the limit which stands as of now. So we'll have to see, because what the law says, it will be notified by the central government. But those threshold limit of Jayant, interestingly, that 20 employee trigger for coverage, 10 employee trigger for coverage, that remains the same. And that is what we are seeing, because I saw somebody said that there was a notification to cover employees under ESIC as per new wages code with immediate effect. What are your views on the same? So I would like to answer to that is that what they are issuing, yeah, they are drawing a reference to ESI Act. But though what they are saying is anyways what is applicable to establishments. Today also, if the establishments are having 10 or more than 10 employees, they're expected to cover themselves. So they are not adding anything new. What they are trying to say is that with the code coming into notification, the organization should reassess and see where do they stand and accordingly start doing the compliance, which anyways they have to do under even the present law itself, or rather I would say ESI Act, the old one. So I think that hopefully should answer that question. As far as regarding the gratuity part is concerned, right now fixed term employees are not covered because we see that continuous service period of 4 years to 40 days, 4 years, 190 days applicable. So as a result of which fixed termers who used to typically render service of 2 years, 3 years, they were not liable, or rather their organization weren't liable to contribute or pay towards gratuity. But now the fixed termers have also been included, and this will include your expat population, people who are coming into India on secondment deputation, who are there for a fixed tenure. So in all likelihood, because wherever they render a services of 1 year or more, they will be required to, or the organization will be required to pay gratuity on to these guys on a pro rata basis. So that is one big change for the segment of employees. Wage definition will cover in the next segment. So fixed term employee, so that concept was not earlier there in IRC code, but now it has been introduced. There's a definition which says that fixed termer is somebody who will be eligible to all kind of statutory benefits, be it your PF, gratuity and all those things. But specifically in relation to gratuity, they will be entitled to gratuity on a pro rata basis. Uh, a concept of reskilling fund has also been introduced, wherein wherever a company is retrench their employees, they will be required to contribute at least 15 days wages last on by such a worker towards the upskilling fund, which will be contribution by establishment to the government, and then the government will be crediting this money into the account of the respective worker within a period of 45 days. So that is basically what we are saying is the government is taking the onus. They say organizations will pay it to us and then they will pay it to the respective workers, maybe through some kind of a direct benefit transfer kind of scheme. So again, the nitty-gritties around it and how the government will be transferring this amount, what will be the mechanism, will there be requirement to file any kind of separate return, is something that we'll have to wait and see with once the rules also get finalized. Similarly, I think for application of registration, alteration of name of trade union, so more reliance on technology. So registration, although those application has to be done electronically and the approval will also come likewise. But apart from that, I think the requirement of the 7 or more members to form a trade union, those limits continue to remain the same. So on the appointment letter, one good aspect I would say has come up is that it has now been mandated that every establishment who are engaging employee, they will be required to first and foremost issue an appointment letter. Plus, there will be a prescribed performer which will be prescribed by the states, which says that they have to issue the employment contract, wherein all these respective fields will also be have to be populated. These fields can be date of joining, Aadhaar number, labor identification number of the establishment, UN number, father's name, as well as to mentioning what will be the wage breakup, what will be the benefit in kind breakup. So we are seeing those performers which have already been circulated by the respective state government. So the onus on the organizations will be to issue employment contract to new joiners in this particular format, as well as at the same time ensuring that even the existing employees get issued such a contract within a period of 3 months from the commencement of the code. Now, overtime is there in both the OSH
Just
code.
holding you back on the first point, because you specifically mentioned that appointment letters to be issued to the existing employee, because this is a lot of work.
Yeah.
It
Now
is.
typically, are we also suggesting that the fresh appointment, because typically these are employment contracts, a 20-pager contracts would be there. So are we supposed to issue a addendum or amendment to the existing contract, like a typical one-pager, 2-3 liners, or it has to be, freshly drafted?
No, that's
Well, they,
in the same format. In the specified format, Jayant, we have mentioned that there is a specific format which they are going to publish. So we have to issue the fresh appointments in that particular format only.
So, Jet, what they are trying to say here is that they will not govern the terms and conditions of the employment. They will not govern that whether how the confidentiality clause, how the indemnity clause, how the secrecy clause, and all those relevant, contractual clauses. They will not be governing those aspects. What they're simply saying is that you issue a fresh employment contract to a new joinee or a existing ones as well, but it should have some fields, and those fields have been prescribed in the relevant draft rules as well, that it should have those fields, and all those fields have to be filled in. So your
Correct.
name of the employee, father's name, date of joining, what is the skill level, what is his designation, what will be the compensation breakup, all this is required to be captured when we issue the employment contract. So I think the remaining terms and conditions will continue to remain the same. Now,
So you are right, Jayant. It is sort of addendum only.
in that
Addendum
way,
to the main letter, but it has to be issued.
mhm.
Understood.
Yeah.
But that format is not yet out.
No.
It is there in the draft rules,
No.
Jen. I was just having a look
Okay.
at the Delhi draft rules, which
State.
has been recently issued. So state-wise, they are issuing, but
Uh,
again, it may or it could differ from state to state, because every state would be trying to cover as much as possible,
yeah.
or information as much as possible based on their own set of criterias.
So
So, but
they have basically given a broad guidelines how to
mm,
issue it, what are the fields which are required to be covered there, but it has to be very well validated by the states, respective states.
yeah. Yeah. So covering on the overtime part, so those changes or those provisions are already there. What they have just said, and I would like to differentiate here, because there were some concerns that were appearing that whether the overtime will be applicable to all the employees or whatnot. But the thing is, we have to see overtime regulations from two legislation perspective as far as regarding labor codes is concerned. One is the code on the wages. The second is on the code on occupational safety, health, and working conditions. If we talk about the code on wages, therein they say that all those employees for whom the minimum wage is prescribed will be entitled to overtime at double the rate of wages. That is what the code on wages says. But the code on occupational safety talks about the worker. So they are saying that wherever workers are rendering overtime services, they will be entitled to overtime at double the rate of wages. Now, the key distinction here is, in the first law, they are saying all those employees for whom the minimum wage is prescribed. The second segment covers all the worker population. Now, worker population, for worker, there is a separate set of definition. It is a lot different from what we term as an employee. It is a more kind of a restrictive definition which covers individual contributors. So it says any person who is a managerial or administrative level, or any person who is at a supervisory level but earning wages more than 18,000. Yeah, 18,000 will not be categorized as a worker. So what we are saying is that OSH code talks about the overtime more so from the perspective of people who are individual contributors. So that is what the clarity is there on that side. In terms of the overtime, what we are talking about is 8 hours of a day. If somebody is working more than 8 hours a day or 48 hours in a week, then those overtime rates would be applicable. But then at the same time, flexibility will be there. So if somebody is working 12 hours day in a 4 days, then again it will be 48, and that person can render services accordingly to his or her flexibility. So those flexibility has been accorded by the respective legislation. Similarly, for annual entitlement leave with wages, right now the limit is 240 days, so it has been curtailed to 180 days. So it is a good provision for new joiners, wherein by rendering services of 6 months or so, they will be entitled to leave with wages. And similarly for leave encashment as well. This is one big area, because what we are saying is the government is saying that you cannot carry forward more than 30 days. Rather, you avail the leave and have that work-life balance, and then whatever is the excess days, you can apply for a leave encashment as well, and the organization will be mandated to pay the leave encashment on that basis, rather than waiting for the person to retire or resign. So that is one area that we see organizations will have to tweak their policies and ensure that those provisioning, those actuarial mechanisms are put in place, so that they have the adequate funding in place to make such payments.
And this will be paid at after the end of calendar year.
End of calendar year. Yeah, they have used the word calendar year. So yeah, we are looking at calendar year only. Now we move to the part covering the definition of wages, and Jayant, I'm seeing a lot of queries on wages part. So I hope in these and the subsequent slides we will be able to address the queries. Of course, we are aware that there are some ambiguities and some clarification is awaited, but the government from their side has provided some clue as to what their thought process is. And I would say, Adarsh sir, their thought process and ours is more aligned, what we were discussing today. So we'll come to that part. That is one interesting area. And
Yeah.
so we will be having some good news for the companies wherever they were feeling
Mhm.
that all is lost in this case.
Yes.
We have some
We'll
good
come to the next
news.
slides. Yeah,
Yeah.
definitely.
So
Mhm.
definition of wages is an interesting concept, because I think you highlighted, Jen, that how many times have wages been defined? What was the number?
It was more than 400 times.
More than 400 times in different legislation it has been defined. So that is one of the area that we are seeing a lot of challenges can get alleviated with this uniform definition. Now we talk about the meaning and inclusion part. So what the wages definition defines is all remuneration will be forming part of your wages, which will include basic pay, DNS, and retaining allowance. So all remuneration, what clarity we are awaiting from the government is what do they mean by all remuneration? Will it include even your one-time payments like joining, referral, as well as the variable bonus? Variable bonus is one which is causing a lot of heartburn among the organization, wherein they are trying to understand that while I'm sitting in the month of April, May, and I'm supposed to do my compliance, how can I factor in the variable part? From our plain reading or our other say based on our experience in dealing with the labor legislation under the present regime, what we are seeing is I think the government will not want to cover such kind of payments which are variable or one time. We are seeing it in ESI law, we are seeing it in PF, wherein bonus is treated as an excluded component. So I don't think their intention will be to cover such category of one time payments, because it will lead to unnecessary confusion and non-compliance on the part of the organization. What they have specified very clear is from this definition of the first bucket, certain exclusions will be allowed, like stat bonus, HRA, conveyance allowance, remuneration payable under any award settlement, some pay to defray special expenses, overtime, and so on and so forth. So these specified exclusions will be there. But at the same time, to prevent the organization from planning or structuring their composition in a way so that too many components as an allowance are not given, they're saying that wherever such exclusion basket exceeds 50% of the total remuneration, then it will be added back. So while calculating this, we have to be aware that the stat bonus till the commission part is something that will be considered for that 50% limit. Specifically, your gratuity and the retrenchment compensation have been excluded, because I think their nature is quite different. Um, Similarly, there is a conditional benefits in kind. So wherever those benefits in kind is being provided by an organization, those will also be considered for the purpose of definition of wages to the extent of 15% criteria. But then the key point here is what is the definition of benefit in kind? What will be the valuation criteria? So we'll have to wait for the clarity on those aspects as well. I think in the next slide we are covering some interesting numerical simulation. So let's look at this one. This is scenario one. What we are looking at is a typical salary structure. I think okay. So what we are seeing here is typical salary structure of 25,000 having basic HRA and so on and so forth. And if we keep the excluded portion in mind, while keeping in mind the definition of the wages, what we are looking is HRA, commission and conveyance will be excluded, but that is coming to 13,000. Now 13,000 is exceeding 50% of 25,000, which is 12,500. So this 500 will be added back, and my wages for the purpose of my compliances will be coming to 12,500 only. So this is how we are expecting the definition to work out. Of course, let's go and see some more slides on this simulation.
So one specific thing I want to ask you, commission, typically commission is a variable part, right? Which can only be determined towards the end of the year. In the beginning, you only have a, a vague range in which the payment, it can be done. So is it payable or the maximum limit, or what has been actually paid in that particular year?
See, I'll tell you, Jayanta, it is an interesting question because again, commission is what normally, if we associate it, is nothing but normally earned by salespeople. So wherever they
Right.
achieve sales target, then they get it. But again, it is very variable by nature. But in certain cases, we have seen that companies also commit that besides this remuneration, will also be paying a fixed commission on a quarterly basis, on a biannually basis. So wherever those fixed commission has been committed and mentioned in the employment contract itself. So that is why we have included in the all remuneration part. But having said that, if we have those variable compensation, variable bonus, and those one-time payments, I would say right now we shouldn't include it when we are doing that all remuneration calculation. Reason for that is it is variable by nature. Today down the line, sitting in the month of April, May, I don't know what I'm going to be paying to my clients, what targets are they going to be achieving. So how can I start doing the compliance or start including those numbers whilst working out that scenario. Second important factor here is that wherever we have, and I would say most of the organization would be having flexi basket in place. So we are seeing a regime change wherein those variable payments will be moving towards the fixed elements. I'll tell you the another reason for this is because of the new regime, new tax regime, wherein we are seeing that a lot of allowances are not deductible or allowed as a deduction. So the whole aspect of the compensation structuring which revolved around that menu based system or a flexi basket system, that is no longer applicable. And so what we are seeing or anticipating is the movement of the organization from a variable based system to rather more fixed salary system. And I think interestingly, others sir, I think in one of our conversations today only, we saw people are saying that in fact government organizations have more kind of a
Yeah.
fixed structure, and so they are
Mm.
going to be least impacted by this. And I
Correct.
think what the government intention is to move towards that particular thing where even as much as fixed component is there should be paid to an employee, because that guarantees them that so okay, so if my committed CTC to me is 10 lakhs or 20 lakhs, that is what is going to be hitting my bank account after deduction and all those statutory benefits. So
And
that is what
and
we are
uh,
seeing as a trend.
and Anurag, I think so. One-time payments are also excluded.
Hmm.
If there's a one-time payment paid to an employee,
Absolutely, absolutely, sir. Yeah,
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 they'll also come under the exclusion category.
yeah. So, Akshay, if you can move to the slide on the gratuity part, I want to focus on that a bit because gratuity
Mm.
is one big area, and yeah, okay. Before that, yeah, let's consider it on this one as well. So, this was a recent Ministry of Labor and Employment have given an illustration on how the wages will be worked out. So, interestingly, they have used a CTC example of 60,000, wherein my basic is 20,000, my allowance is 40,000. So, before quotes, they are saying 20,000, 40,000. My PF contribution is 1800. My employer-employee contribution goes 36. Yeah, so it adds up to my take-home pay salary is 56,400. Now, if we look at what happens under the code, what they're saying is, they're saying because my allowances in this particular example of 20,000 and 40,000 is exceeding my 50% of my total remuneration, which is 60,000. What we are seeing is that the government is saying that 10,000 will be added and treated as wages for the purpose of your calculation. So 30,000 is what they will treat as wages. Component wise, things would remain the same. But wages, when we apply the definition of wages, that number for calculating my gratuity, for calculating my leave and all those things, then my wages will be 30,000. That is one big thing. The second important thing is what they have said is they have kept the PF contribution. And this is the news that we were saying is a big surprise for the organization, but something that we were aware would be there in the law itself is that they have kept the PF at a static of 1800. So what they're trying to say here is that wherever you're contributing more than voluntary, then you can keep your PF contribution at the same level. And I think Adarsh, that is where your inputs would be needed. Is this something which is correct as per the law, or the government is also, doing something that is not enshrined there in the provisions of the EPF scheme?
No. Currently, like I said previously also, that it is 12% of 15,000 rupees only as of now. But if that threshold increases, then definitely it will be having impact here also. But the bigger question here is that there are a lot of establishments which are allowing recovery of PF on the actual basic pay. Right. So the question here is that here this 20,000 becomes 30,000.
Yeah.
Right. So the PF liability will increase to 12% of 30,000 rupees.
Right.
But
Right.
but the most important question is whether the companies they want to go back and restrict the contribution to 1,800 or not. Right. So if whether the contributions beyond the threshold of 1,800, which is currently being contributed, whether employees can continue contributing as an voluntary contribution, and companies might decide to make a PF contribution restricted to 1,800 rupees. So these are the few aspects, which we will come up with our advisory on that.
There is also a clause where government says that you cannot withdraw the benefits or you cannot reduce the benefits. So does it also apply that today I'm paying PF on actuals and not restricting it to 15,000? So I cannot go back.
So Jen, this is a very technical issue, very technical issue. What you are talking about. So you are talking about whether the quantum of benefit once given, can they be reduced or withdrawn, right? That is the question.
Right.
So now, if you read section 12 of EPF Act, it clearly states that the quantum of benefit is directly linked with the wages and not with the PF recovery or any other recovery. So whether we are reducing the wages, the first question, we are not reducing the wages. The gross remains same. Right. And then we are having Marathwada judgment also in place. So these are few. Yeah. So there are, few instances where whether you can reduce the PF or you can restrict the PF to 1,800 is a questionable, and it's a, case on case basis. We will be able to give our comments on that. We can definitely help, employers deciding on whether they can reduce to 1,800 or not. So whether it's doable or not doable is the case study what we have to make with each and every employers. And we can, whether they are having a trust or whether they are having they are reporting as unexempted establishments. And there are a few backend things also what we will be able to share, which will be able to share our comments basis the study of each and every employer. Doable or not doable is both way as of now. It's only the interpretation of the law, right? And we have to strictly adhere to the whatsoever the provisions are there, existing provisions are there, or any judgments which have come with from the either Supreme Court or the high courts. So we will rely on that. But this is the interesting part This needs to be seen. But if you go by this recently published government notification, it says that can be settled to 1,800 rupees. This is the illustration what they are, representing here.
But I think others,
Okay.
this is what we were also interpreting, because whenever
Yes.
people were saying, or the other
Yeah,
consultants
yeah,
were saying
that's
that
right.
there's going to be a big impact on the PF, I always used to
Correct.
wonder that when we are doing it on a voluntary basis, why do we need to increase that, Kitty? Because
Yeah, correct.
that was the big portion, which is, everybody were anticipating that it is going to hit my take home pay. But now with this
Hmm.
clarification, which is aligned with what we were thinking,
Yeah, correct.
uh, I think we can safely say that take home pay might not get impacted.
Yeah, to
But
that effect,
Anurag,
because
there is also a, other side also of it. If I am today, I'm giving a very clean calculation. Your PF is 12% of your basic pay. Okay. Now, if I don't want to change the CTC and I have to make it wages, so it will not be 30% of 12% of PF. It will be 12% of wages.
Hmm.
Or should I make it 10% of wages?
Hmm.
Because in my
no,
case, it could be
then
10%. In someone else's case, it
No,
could be
I would say
11% of wages.
there could be challenges on the implementation part from the payroll side as to how you
Right.
will derive that thing, or how those process flow would work. But I think as far as regarding legislation is concerned, I think this particular illustration makes it amply clear by saying that you don't need to contribute more than what you're contributing right now. Because anyways, you are over and above the law. You are contributing more than what you are required to do so under the law.
You know that.
So I think that thought process is there. Of course, from the payroll side, if we see it, we'll have to see, because we're not talking about 10 employees or 20 employees, wherein you can keep it on your head, but rather what will be the system process flow? What are the, mechanism which will ensure that those rights are exercised by the employees, wherein they want to keep their PF number static, or rather, I think because what the government is also saying is, if you want to contribute more than what is required, you take a VPF route. That is more better, instead of contributing on a full basic. Well, I'm hearing a lot of noise when I visit a client, particularly in IT sector and all those, wherein these young engineers always say that we don't like to contribute to PF more than what is statutorily required. And so their focus is more on investing in schemes like NPS or some market linked schemes, wherein they get a better rate of return. So that is their thought process, and I think if you look at the provisions of the law, I think it is getting aligned together in that sense. Now, where we are feeling pinch from the organization's perspective is the gratuity piece, and gratuity is one big ticket item that we are seeing will be impacting in terms of, if we look at this simulation as well, wherein the CTC is 24 lakhs. If we exclude the variable part, it is 20. We have a basic of 8 lakhs. So my basic is considered for the purpose of gratuity under the present law. But now with this wages definition come into picture, once I plug that definition, we are getting a wage of 14 lakh 34,000. So my gratuity amount increases substantially from 3.84 to 6.89. And that is where we are seeing a hit from the company side, more so for those companies who are used to keeping the provision in their books and which are unfunded by nature. So and again, for that segment of companies wherein the gratuity limit has not been limited to statutory threshold, which is 20 lakhs. So there are many companies within India who said that we will be paying gratuity based on your tenure of service and will not cap it to 20 lakhs statutory limit. Even the Payment of Gratuity Act 1972 also allows organization to provide a better terms of gratuity. So we are seeing those scenario wherein wherever companies are falling in that band area, therein they can be adversely impacted because of this new definition of wage. I saw somebody saying that this gratuity example also applicable on leave encashment. Yeah, similar. But leave encashment, I would again say it depends on organization to organization. In few organizations, we have seen that leave encashment is paid already on a gross basis. So those organizations, we're not seeing adverse impact. This can impact those organizations who are paying leave encashment on a basic salary. So that is the impact that we are going to be seeing. So, sir, on the gratuity aspect, based on your discussions that you're having with insurance as well as companies, what do you see in terms of the trend that is the company willing to take that level of hit, or what will be their future strategy on this particular piece?
See, again, Anurag, depending upon the size of the company, our recommendation is considering that there is a huge hit which is going to come, a trust should be formed, with the approval of PCI, Principal Commissioner of Income Tax. So it will definitely reduce the overall burden on companies because they can part fund it, right? And the rest they can is not required that they have to fully fund it based on the actual valuation. They can part fund it, and this
Hmm.
part funding will take care of their future liability whatsoever is there. And that will also save companies from the income tax. That will be treated as a tax free benefit also to the companies. And if
Hmm.
they are part funding, that it won't even have much impact on their cash flow also, because most of the companies are worried about that, why we should fund fully. So not required to fund fully. The law doesn't says, or even this labor code or the social security code, they never specify that what percentage you have to fund it. So
Hmm.
on the total liability, our prudent advice would be that whatsoever actuarial valuation is there, just part fund,
Hmm.
right? And then it in itself will take care of your the future liabilities, if any. And if the companies are of a moderate size companies, they can always go in for the insurance cover from the like the way it is provided in the Karnataka law, that we have to then go to the insurer and we can seek the group gratuity policy, and that there we can insure this type of risk we can mitigate from there. But for the larger companies, it is always advised to have a own trust. That is where the size exceeds 500 or more employees, they should definitely form a trust. That's our advice.
Hmm. So on penalties, we are not going to be spending that much amount of time, but the crux here is, if you look at the quantum of penalties, the government intention is very, very clear that we are making it easy for you to do that level of compliance. But at the same time, if there are those incidents around non-compliance, and particularly habitual non-compliance, then the penalty is going to be greater than what we are seeing under the present law. And in some cases it can be as high as 10 lakhs to 20 lakhs. So one has to be mindful, going forward basis, once the codes come live, that non-compliance will not be treated in a light way. uh, Already whenever Jayant, we do the due diligence exercise, we see that because of the lack of awareness, and because of the I would say meager amount of penalties, sometimes organizations skimp on the compliance by saying it is better to be non-compliant and pay the very small amount of penalty, which in dollar terms is around $1, $2, rather than bear the cost of the compliance. So now we see that attitude is going to change among the companies, and they would say that yes, now compliance is going to be a big piece, and this is something that we have to ensure is being done in a proper way, so as we are not sitting on a non-compliance area. The second important fact here is that because of the unification of the codes, earlier we used to have 29 laws. So in each of the laws, there used to be separate penalty. But now, because of the unification, my first offense, if I do it in gratuity, will be treated as my first offense under the code. If I don't comply with the PF part, then it will be treated as second offense under the code. And similarly, so I have to be cognizant on how the organization is doing that level of compliance. This is where your establishment's role come into picture in ensuring that wherever your clients are deploying your tool, so those compliance mechanism are not only followed in spirit, but as well as the entire substance is also being followed.
So one question on the lighter side. So when you're saying second and subsequent instance, is it in the same year or it is in the lifetime?
There's a lag time. I think 5 years is something there, that within 5 years, if again there is a non-compliance, so they have you can say some kind of cooling off period or some kind of period they have mentioned, that once you do a offense, if those offenses not repeated within the same 5-year period, then in such a case there might be some leniency. But it is again repeatedly committed, then then it is going to be harsher for them. So under the existing law, it was kind of a slap on the wrist. But now it will be, it will be more kind of a hard hit on the organizations.
Yeah, and then they have mentioned, or they have already mentioned, if you see the first slide, no, the code of wages, if you see that particular column, second and subsequent commission, that is within 5 years from the date of first or subsequent offense.
Right.
And you look at the amount
And
of
here,
penalty here, even the first instance, sir, it's 50,000. That's not a small
Yes.
amount. And
Yeah,
then
yeah,
second
correct.
offense is 1 lakh. In fact,
Hmm.
if you look at code of wages, if we talk about code on industrial relation, it is going as high as 10 lakhs, 20 lakhs. So that's a big amount.
Hmm.
So if I
Yeah.
retrench my employees, which is not aligned with the provisions of the law, then the amount is very, very high.
Yeah. Yes.
and here we are also talking about imprisonment coming up in the second instance, third instance, right? So and
Yeah.
Hmm.
hence,
Yes. Yes.
and
Yes.
and
Yes.
when I understand the imprisonment, it could be the imprisonment of the designated manager or possibly the board of the directors also.
Yeah. Actually, it says that who is the plant manager, or who is the
Okay.
person who is who handles the affairs of the company. It
Mm.
can be MD. It can be a
Okay.
CEO.
Hmm.
That way.
So there will
So,
be a definition of the employer, Jayant, and it basically covers anybody who is occupying the position of a managing director, manager, or occupier of the factory, or anybody who's making the
Yes.
decision or authorized
Mm.
by the respective persons. So they will
Yeah.
be responsible. In fact, I think categorically remember, sir, for PF as well, whenever we file
Mm.
those 5 AWs, so we have to
Occupier.
mention that who is going to be
Correct.
the employer in this, who will be the management, so that the PF
Mm.
authorities are already aware that who is the person.
Yeah,
So
that's right.
yeah.
Because see, Jen, what happens is that he rightly said that if mandatory you are required to fill a 5A form, that is the occupation, who is the occupier. So upfront you have to give that particular information to EPFO to the, and nowadays they're very stringent. They do insist on that. So the first thing what they insist on that, that
Mm,
who is the occupier of the company. You have to declare upfront there and upload in their portal.
mm,
hmm.
Yeah.
So if it is an employer, so if it's an employee, who has been designated as the manager of for that unit or the entity, so this penalty will remain with him forever. If tomorrow he leaves the organization and then also then the offense
No, no,
get
no.
another.
Till the time he holds a specific position in that particular company.
No, so what I'm saying is there was a miss during his tenure. Now he has
Hmm.
left the organization and moved out. So
Correct.
so he may still be held responsible
No, no, no,
for
no,
the
no.
offense?
Then
No.
whosoever the who occupier is there, he will be responsible for all the deeds of the previous incumbent.
Okay.
Yeah.
So what I'm essentially understanding also, sir, that the need of a due diligence on an annual due diligence, because at the time of changing the employer's name or the manager's title name here, or or if we talk today, we're talking about M&As and all, the need of a due diligence, which was earlier obviously there, but it becomes even more stronger
Correct.
today.
Yes, yes, yes. Very important.
And
100% right.
and maybe
Yes.
and maybe a more thorough due diligence rather than just having a tick box exercise where you say, oh, it was
Mhm.
filed, but whether it filed properly or also not, you've got to start going deeper into this same as well.
Absolutely. You are 100% right. This is a very, very strict, because this is directly impacting the establishment as well as the specific employee. That's why the due diligence is definitely required.
One thing I'm noticing, I see imprisonment everywhere now. Whereas there was a time when the government was trying to reduce the imprisonments. Jan Vishwas Act part one, part two. Government was, the attempt was that to reduce imprisonment as much as possible. But here I'm seeing uh, a lot of imprisonment.
mm.
But it was still inbuilt also. Currently also it is inbuilt.
Yeah,
But
I've got
since,
an interesting
yeah.
comment on my chat box. Somebody has mentioned very rightly that change in mindset is required instead of trying to find ways and means to look at loopholes. Jugaad. We should look at complying. I mean, that's the moral of today's session.
And also
Correct.
sir, one thing what I want to also state here, because and coming from another same comment, yes, earlier we could manage non-compliance. Today with laws being stringent and having all the record, because if my first offense was commenced was there, the record is always there in the with the government. Earlier, today, finding if I did some some fine was imposed on me or not 2 years ago, 3 years ago, it may may be difficult, but tomorrow it will become even more stronger, easier. Maybe I don't know whether the government will come up with some kind of a portal where they would give an APIs also to understand and do a kind of a due diligence as to what fines were imposed onto on a particular entity or not. So you're creating a trail of every small fines which have been imposed, every small offense which have been identified. Now getting rid of it may become even more difficult.
Correct.
So yeah.
In fact, one of the interesting question that I'm seeing, and I think we never mentioned it, because there are certain laws which have not been subsumed under the labor codes. Interestingly, these are state specific, like shops and establishment. There is a POSH Act has not been subsumed, the Labor Welfare Fund and the professional tax. So I think one of the overlap areas is gonna be code on wages, OSH, and your shops and establishment, because if you look at shops and establishment, they also govern aspects like leave. They also govern aspect like the safety of the women employees. So I think in terms of the coverage wise, in terms of the applicability wise, one will have to uh, do a good analysis of all these provisions and see that to my particular setup, which provisions is going to be applicable and how I need to do the compliance.
But I think Anurag, government is also bringing, states are also bringing some changes in the shop and establishment, as we have recently seen in
Absolutely, absolutely.
Haryana
I
also.
think more or less
Maybe
alignment is going to be there. Ultimately, we are going to be achieving that level of, I want to use that science phrase of singularity, wherein things will become more or less uniform across states. But that is, I would say, a progressive view. But each states have their own dynamics. We have certain states who are a bit backward in terms of their development, so their labor population or employee population will be a tad bit different to advanced industrial states like Tamil Nadu, Maharashtra, wherein we have a different segment of workers, laborers who will be requiring different kind of benefits or facilities. In the
but
meanwhile,
this
I'll address, I think, one interesting query on the crutch facility. I think somebody raised, sir, any change on having the crutch facility? Not much change. So, a crutch facility is prescribed under the Maternity Benefit Act as well. So, now covered under the Code on Social Security, it is covered under the OSH code as well. So, any establishment having more than 50 employees are required to have that crutch facility. Now, those crutch facility can be in-house or, a couple of organizations create a joint crutch facility. That is one thing. So 4 visits will be allowed to women. But interestingly, I think one of the interpretation that is coming up from the OSH code is that even for children up to 6 years, those crèche facilities will be facilitated. But there they have used the word employee and not the gender wise. So while Maternity Benefit Act focuses on women employees, but your OSH code talks about employee. So does that mean that even even your male employee members will also be provided such kind of facilities, is something that we'll have to see. I think right now my legal interpretation is coming that it will be should be provided under the OSH code, but I think we'll have to wait for some more clarity on this.
just want to do one quick check, because knowing how much is left right now, I know that we are going to take more than 20 more minutes. I just want to get a quick thumbs up from everyone if you're okay to extend it. Thank you. So we will try and wrap it by 5. We have 25 more minutes, but I know this requires possibly a day of a workshop rather than 2 hours of a webinar. But let's
It
move on.
requires, Jan, now it requires a dedicated channel. We need to start building something around it. Because myself, Adarsh sir, you have been talking about legal code so much that you started even dreaming about it as well.
Yeah,
Which
correct.
is not a good sign. Yeah.
Correct.
So quickly on the business impact. So if you are part of an organization, part of the HR, legal, payroll, how does it impact you in terms of your organization's compliance? So first and foremost is of course the salary structure alignment, as we are talking about has to be done, because come what may, just by thinking that if I keep my basic at 50%, that will not do. That is not how the calculation or methodology works. I think what example we have seen from the government side is also very, very simplistic. They have just categorized some components as allowances, but what those allowances will be is something that we'll have to factor in. We'll have to dig deeper and analyze the interpretation of the law of wages. Second is what will be the exact fallout, as myself, Adarsh sir, and Jayant were talking about on the gratuity, PF, and overtime. PF, I think we can remove to a large extent as of now. Of course, when we do those in-depth analysis, there has to be positions that has to be built in. There has to be consensus along with the regulatory authorities. Compliances under the codes is a key thing, because ultimately the labor codes will be all about compliances and your policies procedure, and that's why alignment of the HR policies and all those things would be there. But the key thing is, wherever you are having different category of workers, employees, those categorization has to be done between fixed termers, between normal employees, between migrant population, between remote working, because based on those categorization, your compliances will be a tad bit different. Working hours, leave policy, rest days, of course, those has to also be aligned, because with the respective state government rules on the labor code, as well as respective shops and establishment legislation. Letter of appointment of employees, I think that is very much clear. One of our team members has in fact posted on the letter of appointment what are the fields that is expected to be covered. So I think that will be a good reference for you guys. Contractor related compliances, that is one big area and almost neglected by many of the organizations, wherein due diligence, concurrent audit, and all those have to be there. As far as regarding the contractor related compliances are to be done, myself and others have already handled big item cases wherein principal employer is suffering because the contractor hasn't done their set of compliances,
Correct.
and where the principal employer has in fact make the payment to the contractor. So those key areas is something that can adversely impact your margins, your cash flow. So one has to keep in mind that proper policy, proper agreement, proper time to time audit has to be put in place to curb that level of non-compliance. I think in the next few slides, we have just covered what is our support areas. Of course, understanding the codes is something that we are imparting. Those sessions are already started to take place in terms of providing our clients and the participants on the overview, analyzing the impact. This is a very deep level of analysis that we do, and provide a solution to the clients. Of course, it is very dynamic by nature as well. So we are looking at this particular framework of the labor codes will not be a 1 month or a 2 month exercise, but we are seeing it stretch to as long as 9 to 12 months before we align an organization setup with the labor codes. Of course, the relevant central and the state rules also come into picture around that. And last but not the least is around the communication to the employees. That is that is a kind of a recommended or rather must activity that an organization has to do as far as regarding communication to employees is concerned, because the minute they see their net take home pay take a dip, or any other monetary benefits or non-monetary benefits getting reduced, they will be approaching the HR, and then there will be those grievances that will need to be addressed. Yeah. So I think in the next few slides, what is our scope and how we, myself, Adarsh, sir, and Jayant are working together in assisting the organization. So think of it as more like a journey. It's not something, it's not a kind of a sprint, but more like a marathon, wherein we see it running this exercise for 9 months to 12 months before you become a totally compliant with the labor codes. So we are
Yeah, so
441.
and Anurag, as you just mentioned that maybe a couple of hours may not be enough even to understand the basics of it. What as an to our clients and organization we are suggesting, what you should do as a first step is try and bring people together, your legal, HR, finance team, because at least they all have to understand this is, and sorry, I think we have missed IT as well. IT should also be here because they have to play an important role in making changes in the relevant systems today. Uh, they all have to understand the quantum of impact, because we are talking about it impacting all of these functions. Um, a detailed orientation so that everybody understand how it is impacting others and what kind of a role and support they will have to play. I mean, it could be possibly a half a day or a 1 day kind of on a workshop where these people come sit together. They understand how and what are the key areas which your organization will have to play, important role. It could be different for maybe a possibly a manufacturing entity to a hospitality industry to somebody who's in a oil and gas to mining sector, or maybe somebody who is which is an IT ITS company, or within IT ITS companies, your Indian company or GCC, and if you're an Indian company, your challenges could be different. You're a GCC, having foreign employees coming to India, your challenges could be very, very different from an Indian uh, uh, based ITS organization. So these are something very, very specific to your organization. So getting complete understanding of it and common understanding about your teams, this is something very important first to start as a first step. What the next, as Anurag just mentioned about a detailed assessment and comparing existing regulations, with the or provisions of new ones. While I would say you'll find a lot of data available, then there are articles which have been written by our team. We have been continuing to update those articles. These decks we will try and provide you, and Trishul has just shared a small form, because we don't want to bombard your mailboxes, because I see there are from 300 plus people who are attending. So we don't want to bombard your email boxes and with 300 so many mails. If you need it, please fill in the small form, and our team will ensure this deck will be shared with you. But beyond this deck, you will have to really do a customized approach for yourself, a deep assessment for yourself, what is going to impact you. Your employment contracts will come in play. Your payrolls will come in play. Your your pay structures will also come in play, because it is going to impact. You can't have a scenario where your employees are not happy. You cannot, just because the new laws have come, your employee will not care about it, right? He want his salary uh, on time, in the way he has planned, right? You cannot reduce his payout. You cannot suddenly increase his payout also. There's a tax planning which goes for him. So all these impacts, understanding them, and what is the right time for you to make a changes, because some impacts you may not, the impacts are coming. You're going to take those hits, or you're going to take the decision. What could be the right time? Your appraisals could be affecting April, or your appraisal could be affecting maybe a mid-year, or maybe affecting 1st January, or maybe effective 1st April, but maybe announced in June. How those plannings will go for you, arrears, everything will have to get impacted, because somewhere maybe because I've seen organization, maybe the payrolls, the appraisals are impacted 1st April, but they are announced in July. Now, if I'm going to make a change, now I'm moving to the new code, can I announce my appraisals in July and make amendments from 1st April? I don't know. Let's sit down and do an assessment. Then plan for a transition for you. And then obviously, as Anurag just mentioned, it could be a 9 to 12 month journey also, in slowly moving you without a glitch, without turbulence, to a newer codes, and being compliant with the rights of the law. Anurag, you want to add something here?
I think that is a perfect, in terms of the approach wise, because that is what we are looking at, and that is, I believe, based on our, good amount of conversation that we are having with clients, we are seeing that this is this kind of solution that one should look at. First and foremost, it has to be phased manner, and it all starts with, first of all, giving an overview to the stakeholders. The stakeholders is right, because this is not something that I would say belongs to HR or payroll or finance. There has to be a focused group that has to be created within an organization who will be responsible or acting more like a spot for such kind of projects. And then, of course, depending upon the clarification queries, because I see this is dynamic by nature. Today, whatever position we take today, it might change. And that is why I think somebody asked this question, that today sitting here in the month of December, somebody is retiring. Should I pay the gratuity? I would say no, because uh, based on the contention of the government, based on what we are seeing, the intention is not to do an immediate rollout of the labor codes. There are certain key factors that has to be put in place. So right now, if one decides to pay gratuity on a higher wages, and tomorrow down the line one gets to know, then of course those recoveries and all those things will become a big task. Rather, one practical approach is to pay it on a basic pay, and then be clear about your intent as an organization, that look, this is where we are. This is a dynamic situation. As and when something or some update comes from the government side, we will be aligning those and making the payment if it becomes due from our end. I think that is a practical or a pragmatic approach one needs to take instead of giving some kind of a knee-jerk reaction to this latest development.
Correct, because there's a time bar thing also. No, 30 days we have to settle the gratuity. So it's better to pay it off with a caveat.
Yeah, so this is basically we are covering.
Yeah,
Yeah.
that's something which when we share the slides decks with you, you will have it. Anurag, why don't we just quickly take a couple of questions which in the next 5 minutes, and meantime, Trishul has just shared a small Google form. Trishul just shared a Google form. I request if you could fill out the Google form if you require the copy of this deck. Secondly, as Anurag mentioned, because we have to move faster, there are a lot of changes that are happening. We have also created a WhatsApp channel, and where we will keep sharing the latest updates also with you. And if there is some interesting article we are releasing, there's some webinar, our video recordings we are releasing, you will get a link there immediately from our team. Thirdly, there is a YouTube channel also where these videos will be published. The team is going to share the link to this YouTube channel also. My request is please subscribe to it so that you get informed at the earliest. So, yeah, Anurag, if you can take a couple of questions.
Yeah. So there are lot many questions. I think let me take it couple of them, and then what we can do is we can um, summarize it in a way that we can later on address it, or use your channel to basically provide those queries. But I think more or less what we are seeing is one question is, what is the effective date for revising salary structure under the wage code? Our view around this is, at present, start that structuring exercise, start those planning activities, but don't execute it as of now, because if we look at the intention of the government, they're mentioning 1st April. So we'll have to wait and watch, but at the same time, those planning or those preliminary activities is something that needs to be started. So to answer your question in a simplistic way, there is no effective date that has been notified by the government. We're looking at a time horizon of 1st April, and obviously because of the logical reason that those consultation, those public participation, those public inputs have to be considered for finalization of the rules. So hence, right now we are looking at a time horizon of 1st April, more or less, but that situation is also pretty fluid in that sense. Um, 4 dates, core codes are effective from 21st November. From this date, should we stop following existing laws and start implementing? The answer is no, because even if you look at that Press India release, the intention is clear. Comply with your present set of laws, and as soon as you get a latest update from the government side, then you start working and executing on it. But preparatory and auxiliary activities has to be started in terms of understanding the codes, in terms of understanding how it will be changing your policies and procedures of the organization, how your payroll structure, how your payroll timelines have to be followed. So those things have to be one needs to start right now. Reason for that is, if 1st April is the launch date, then we are hardly left with 3 months to cover all this up. And we are talking about 4 labor codes, and covering 29 central labor legislation. So it's a kind of a big task. PF Act is yet to be replaced under SS code except for enabling provision for scheme. Yes, because they haven't technically repealed the PF Act. And more or less in the transitionary framework, they have categorically mentioned around the scheme part that those schemes will continue to remain in place for a period of 12 months. So yes, those schemes are still operating. PF Act I think, is labor code, include shops and establishment, the definition of industry. If yes, then what section? So this is a very particular question. Unfortunately, I'm not do not have at the top of my head all these sections because they are many. We are not AI per se. So is labor code include shops and establishment in definition of industry? There will be a separate definition in shops and establishment and separate definition of industry. More or less, the shops and establishment draws the definition of the industry from the Industrial Disputes Act, and likewise. So it is expected that if my definition of the industry changes, likewise the shops and establishment would also be doing those amendments. Can you please explain about the wage structure under the Code of Wages? I think we have already specified. Does it means that inspectors can be hired as consultants? No, no, no. Inspectors can't be engaged as a consultant. They would act like a consultant. They would be your
Like
advisor.
advisor.
Like an advisor, you can
Yeah.
approach them in spirit. That is what they have mentioned, but you can't hire them as a consultant, because if you hire them, then we'll be out of our job. So that is a plain reason.
But I think this is a very good move from the government, because when I have always specifically spoken about this, that there are countries where the regulators will come educate you. And if I talk about in India also, RBI is playing that kind of a role very actively. RBI is promoting the SROs. It is very actively playing a role of even supporting or discussing or educating those SROs so that industry can be benefited at large. I think if this is coming in the labor courts, I think this is a very welcome move. We could see possibly a lot changing. There could be industry association as it is RBI is promoting. I don't know what, but it's a very welcome move, very foresighted, aligning with the the global regulators, how they are trying to create education. But also it includes it. You know what also effectively means? Your focus on compliance has to be very, very high. You can't just today skip those compliances.
I think somebody commented these codes will lead to financial stress on both employee and employers. I would say let's take small pain for a bigger gain, because the novel is intent. India is a dynamic economy. If we want to become a part of that developed framework, and we are looking at developed vision of India by 2047, then that is how those codes will help us, because it covers a wide category and wide ambit of employee segments. So I think the core theme which is running through all these core is the benefit provided to unorganized segment of workers, your gig workers, platform workers. So yeah, it can lead to some financial stress, but again, small pain, big gain. I think more or less we have covered most of the part, Jayant. But I know there are a few segments here and there, but I think because of the paucity of the time, let's then address it through some other ways and means. Yeah, Jayant.
Sorry. Yeah, sure. No, thank you so much. I also know that we skipped a couple of slides because of the paucity of time. Again, I'm reiterating it. 2 hours is not enough. We were just trying to briefly touch upon a lot of things. But keep writing to us in case you have any query. You have our numbers, and fill in the form. We will send you these details. And we will try and come back with more such sessions as we get more clarity. As Adarsh said, once the state rules are notified, there will be much more clarity, which we will also have, and some more queries also, questions also may come in our minds. We will try and arrange more sessions for this. Thank you so much, Adarsh sir, and thank you so much, Anurag.
Thank you so much. You're welcome.
Thank you, everyone.
Thank you, everyone, for participating.
Nice
And Jayant, in case there are some queries, which you can collate and send it to us, we will be happy to, respond on that.
Yeah.
Sure. So I think we will, Anurag and I were discussing that we may come up with kind of an FAQ. So team has collated some of those queries, and we will, take your inputs also on those FAQs. We'll try and publish them as well.
Yeah. Sure.
Or rather, send it to the Ministry of Labor and Employment as well. I think that is one thing that can be done, because industry government is quite open for the feedback. Yeah.
Maybe then we should be sending to you other sir, so you know where to.
Absolutely.
Yeah, definitely. They had actually asked us.
In fact, they asked us. Yeah,
they asked us.
The authorities know that there's a lot of ambiguity around it, but they are very keen to understand what kind of queries are being posed by the organizations.
Yes. So we can collate and we can definitely take it to the appropriate authorities. Not a problem at all.
But, I think today government is more open, because when the DPDB also was, draft rules came out, we sent a representation to them. In fact, they considered a lot of those pointers which we had mentioned in those representation. And I think we'll try and do that. And request to everyone, please, send in your queries. Our email ID is info@lawrbit.com. You have any query that you feel needs to be added in that representation, or wherein you want us to provide some clarity through FAQs, we'll try and do that.
Correct.
So thank
Chalo,
you. Thank
take
you,
care.
Pranksir.
Yeah.
Thank you.
Okay,
Thank
thanks
you,
everyone.
everyone.
Bye.
Have a good day. Bye-bye.
Yeah, bye bye.